Hey, in this video, I'm going to talk about the Earned Income Tax Credit for 2021. Most of this video, I'm going to discuss the Federal Earned Income Tax Credit. Some states, they also give Earned Income Tax Credit as well. So I will mention one state, which is California, at the end of this video. So mostly it's federal earned income tax credit. So first of all, what is earned income tax credit? So earned income tax credit is a refundable tax credit available to eligible taxpayers who do not earn higher income. Here you need to pay attention, it's a refundable tax credit. So most tax credit usually is used to reduce your tax liability. So it's non-refundable. If you don't have a tax liability, your credit will be wasted because you cannot use it to reduce your tax liability. However, refundable tax credit means even you don't have a tax liability, you still can get a refund. So basically, it's kind of free money from the IRS. No matter you owe tax or not, you will get this type of cash as long as you qualified. Then earned income tax credit, that's for not high income. So basically, say if you have a low or moderate income, you may qualify for the earned income tax credit. We will talk about how much income is considered too much and not qualify. So we just talk about the refundable tax credit means is a qualifying taxpayer can receive a refund even if they have no filing requirement, owe no tax, and have no income tax withheld. As I said, if you even don't have any taxes, don't owe any taxes, you still can get cash back. Then what is the maximum amount you can get from the earned income tax credit? So you can see here, so how much earned income tax credit you can get is based on how many qualified child do you have. If you have no qualified children, you still can get earned income tax credit. The maximum amount is $1,502. So if you have one qualified child, you can get $3,618. If you have two qualified children, this is the amount you can get. So if you have 3 or more qualified children, maximum you can get is $6,728. So just keep in mind, here, this is the maximum for all qualified children. No matter you have a qualified children, 10 of them or 3 of them, so your maximum is $6,728. So now you know maximum how much you can get the credit. Now see, you want to know, are you qualified? So in order to qualify, then first you have to have earned income from a job. So IRS say that this credit is called earned income credit because to qualify, you must work and have earned income. So basically, this credit kind of used to incentivize people to get a job, to make earnings through employment. Or you self-employed, right? So here, example of the earned income, your wages, salaries, your tips, then your self-employment income. So those are the qualified earned income. So IRS have a detailed, list to tell you what is considered a qualified earned income. We just talk about the wages, salary, tips. Then you have a self-employment income. Then if this is a household employee income, so basically if you're working for some household as a nanny, or you housekeeper, clean people's house, stuff like that. So then you earned income is a earned income. So of course they include other things here which is less common. So if those earned income apply to you, you can dive into here. Then I want to talk about those things are not qualified as earned income. So first is interest and dividend. So many people, if you have an investment, you hold mutual funds, ETF, stocks, bonds, those will pay you some interest, dividend, and you sell, you get capital gains. So those income you will be taxed, but those income are not considered earned income, so not qualify for the earned income tax credit. For example, if you let's say in 2021 last year, you didn't work, but you did an investment. Your investment gave you dividend interest, let's say $20,000. So those is only your income. Then you are not qualified for the earned income tax credit. Another common example not earned income is unemployment compensation. During the pandemic, many people receive unemployment compensation. So those are not considered earned income here. Then other things is like a pension, your retirement income, and many people may live on your retirement income. When you withdraw money from your 401k, pension, your IRA, so those money will be taxed, but they are not earned income. So this is just something you want to know. So other things you can see here are not considered as earned income. So just keep in mind, if you have those type of income only, you are not qualified for earned income tax credit. Then after you know that, right? So okay, last year you had a job, then you earned income, but it's not a lot, right? So how much you want to know if you qualify for the earned income tax credit. So how much is too much are not qualified, right? How much is you earn is qualifying. Here, we're gonna address AGI limit. So basically, it's AGI. If you go on your last year, filing tax form 1040, the line 11, you will get adjusted gross income. So this is IRS used to tell you if you are qualified or not. So here, this is the maximum AGI for 2021, right? So in 2021, if your AGI is more than 57,414, you are not qualified for any earned income tax credit. So here, if you have more than that amount, you can move on because you are not qualified for earned income tax credit. So if you have a less amount, you may qualify. Let's see this list. So this AGI limit, you can see here based on your filing status and how many qualified children do you have. Let's say you don't have any qualified children and you are single. So last year, if you make less than 21,440, so you are qualified for earned income tax credit. So let's say if in 2021 last year you are married, you are filing jointly, then you have 2 qualified children. So then you earn less than 53,865. So this you will be less. You will be qualified for earned income tax credit here. Then So that's just that how you read this chart. Another thing keep in mind here, your investment income limit is $10,000 and less. What does that mean? Say, let's say you in 2021 you are married and file jointly. You have two qualified children. Then your married file joint income, your joint income was $30,000. Let's say you are $30,000. Then you also have a $12,000 investment income. So you add together is only 30,000 plus 12,000. You would get a 42,000. So it's less than, you can see it's less than the AGI amount. But even in this situation, it's less. But because your investment income is more than $10,000, you are not qualified for earned income tax credit, just because you have a higher investment income here. So that's something you keep in mind as well. Your AGI may qualify, but your higher investment income will disqualify you. That's another test here. So, okay, so after you, let's say you had a job and you think your AGI is less than the limit amount, you are qualified. You are qualified for earned income tax credit. Now you want to find out how much you can get for earned income tax credit, right? When you want to find out how much you can get for earned income tax credit, you go to the IRS website to find the publication 596. This is for 2021 on the page 33. IRS give you this table to figure out how much you are qualified for the earned income tax credit. So let's see an example. Let's say Mike is age 29, single, made $11,000 in 2021 as an Uber driver. He has no kids. How much earned income tax credit he can get? Okay, let's see. Mike is single here, right? And he has no qualifying kids. So then you can see he make $11,000. So you can see here, this is the earned income tax credit he can get is $1,502. This is the maximum amount he can get. So that's how you find the amount. So let's say if Mike has one qualified child as a single person, single dad, he would get $3,618. You can see here. If he is married and file jointly have 3 kids, so he married filing jointly income is $11,000. He would get $4,939 for the earned income tax credit. So this is how you find how much earned income tax credit you can get through IRS website. Then this is federal earned income tax credit. So now we talk about states. So some states, they give you earned income tax credit as well. As California, here I get this chart is from State of California Franchise Tax Board, which is they are responsible for California state tax collection. So they give you the information here. So basically say this is called CAL earned income tax credit. So based on number of the qualified children. So if you have no children, you make your maximum, you make less than $30,000, you would get $255. However, if you have more, qualified children here, if you have 2, you would get maximum $2,809. So this is IRS limit we will talk about earlier, the credit we will talk about earlier. In previous example, in Mike's situation, he would get a $159 from the states. So the total earned income tax credit from the states and the federal is $1,661. So Mike, you can see he made $11,000. $11,000 is less than the standard deduction for the federal, which is $12,550 in 2021. So which is Mike is not required to file both federal and state tax. If he doesn't file, he will not get this amount credit. If he files the tax, he will get the refund this much. So this is keep in mind. So that's why some many tax professionals will tell you, well, even you are not required to file the tax, you may want to file the tax to get the refund. This is one of the examples you are qualified for earned income tax credit. Okay, this is all I want to say about the earned income tax credit in this video.